Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure. All Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. As a reminder, the focus of my presentation and the focus of the Options Doug chat channel in Discord is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. And I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day and a directional bias. And the second step in my process is execution. And I look at real-time order flow in Bookmap and real-time market maker hedging flow on Spotgamma Hero to confirm my thesis and for setups for entries and exits. And questions and comments are welcome. And I will be watching the Options Doug chat in Discord and the chat and YouTube for your questions and comments. So please, again, your questions and comments are welcome. All right, so what I want to talk about today, first of all, the news items, economic data and events for today as well as the rest of the week. And then we'll go through our positional analysis and then talk about some setups. And there were some great setups this morning, both long and short. Okay, the news for today. First of all, the big event for the week most likely was CPI today. And it came in a little bit hotter than expected. So I think, let's see, month over month, actual came in higher than the previous number, but as expected, the same. So that was the core and the CPI. Year over year came in a little bit hotter than forecast, both the CPI and the core CPI. So anyway, that's the data, and the market has been up and down based on this event. So that was the news for today. And then tomorrow, retail sales come out at 8:30 a.m. Eastern Time. And tomorrow is also the VIX expiration. Then on Thursday the 16th, the PPI comes out at 8:30 a.m. Eastern Time. And then finally on Friday the 17th, that is the February monthly options expiration. Okay, let's take a look at charts now. And let's start with Bookmap. So this is the Bookmap chart for the S&P 500 futures, and this shows the levels that are in play today. And let's go back to Thinkorswim now, and we'll get a higher time frame view of what's going on today. So this is showing this steady trend line. This is SPX and a Thinkorswim chart showing the current Spotgamma levels and then a steady uptrend until it broke. SPX broke below this uptrend last Thursday, tested the 4060 level, which was equivalent to the SPY 405 level, and then it has trended higher. So that was last Friday, and then today has been up and down in the 4100 to the 4149 range. And this is showing, again, the current levels. This is in Thinkorswim, and these levels are provided to Spotgamma subscribers. And this is showing the key levels. There's the put wall still at 3900, and the key gamma strike at 4000, and then the call wall at 4200, and then the intermediate levels in between. So SPX is trading above its volatility trigger, which is generally considered bullish. So that is the bigger picture view. Now I want to look at another Thinkorswim chart. So that's a 1 hour chart. And let's go take a look at today. This is a 1 minute chart for today. Again, the same levels for SPX, and showing the range is around SPX 4100 to 4150, a little bit below and a little bit above. So those are the levels that are in play today, the Spotgamma levels. All right, let's take a look now at Bookmap. And again, this is the S&P 500 futures in Bookmap, and showing the levels that are in play for today. And on my chart, I have 2 columns of levels. In the first, this is the Spotgamma cloud notes that are provided to Spotgamma subscribers for a variety of platforms. We just saw the levels in Thinkorswim, and then in Bookmap, these levels are provided in cloud notes, which are updated automatically. And this is showing key levels for SPX, and that is SPX 4100 converted to an equivalent ES number. So right now Spotgamma is adding 10 points to SPX to come up with an equivalent ES number, and that's pretty close to correct. And it's also showing combo levels, which combine SPY and SPX levels into one level that are converted to an equivalent SPX number, and then converted to an equivalent ES number. Okay, thank you, JEC. Yeah, the 10 is close enough. Okay, so the levels that are in play today, first of all this morning, right after the data, this combo level, L5 level, acted as resistance. Price went down and tested the SPY 410 key gamma strike, and that was noted as support in the AM Founders Note, Spotgamma AM Founders Note. And then price went back up to this 41, this is 4150 level, so that's the combo L3 4149 level, as well as the SPX 4150 level. And note that's also the upper edge of the expected move, and that's shown in the second column here. This is my cloud notes, and I'm showing things like this upper edge of the expected move and the key SPY levels. So again, there's the SPY 410 key gamma strike, and again act as support. Price broke, and now price tested somewhere between the zero gamma level and the SPX 4100 level. And we'll take a look at Spotgamma Hero in a minute to see how options traders were setting up both longs and shorts in the S&P 500. And let's take a look at SPY. And we can see the levels in play. So here's that test in the just after the data of the 4175 level, 4174, SPX 4174, the test of the key gamma strike, back up to the 415 level, back down to 410, and then down to the SPX 4100 level. And note on these are, I'm using my cloud notes as well, and I have the SPY levels shown, just the round number levels are in yellow, the Spotgamma levels in white with red text, and then I'm showing the key SPX levels as well. And I just enter all these numbers in a spreadsheet, and they're displayed and the lines are drawn on the screen. So that's the S&P 500. Those are the levels that are in play. And let's talk about shifts in levels now, and there were very few overnight from yesterday. For the S&P 500, the only shifts in levels were minor. The SPY volatility trigger shifted up from 407 yesterday to 408 today, and then the call wall actually shifted down from 420 yesterday to 418 today. So minor shifts. And then for QQQ, the put wall shifted up from 285 to 290. So minor shifts in levels as traders were making their final preparations set up for the CPI report today. All right, let's take a look at the gamma charts now. And these are the absolute gamma levels. So this is where those numbers come from. And what I'm looking at, this is again absolute gamma, market makers absolute gamma, and above this zero line, that's positive gamma or call gamma, shown by the black lines or black bars, and negative gamma or put gamma below the zero line, shown with the teal bars. So this 4,000 level, this is SPX 4,000, still remains the key gamma strike. And the put wall is at 3,900. So the put wall is the strike with the largest net negative gamma, and that can be expected to act as support. And the key gamma strike, or the absolute gamma strike, is the strike with the largest absolute gamma. And then the call wall is up at 4,200. And that's the strike with the largest net positive gamma, and that can be expected to act as resistance. So notable thing here is really the call gamma above the 4,000 level. So between 4,000 and 4,200, the concentration of call gamma, again shown by these black bars. So that's SPX. Let's take a look at SPY now. And here is the SPY 410 key gamma strike. And the put wall is pretty obvious at 400, the strike with the largest net negative gamma. And the call wall has actually shifted down to 418, but I wouldn't be surprised if it shifted back up to 420 tomorrow. So the concentration of gamma in SPY is 400 to 420. So put wall at 400, put wall at 400, key gamma strike at 410, and the call wall at 418, but really the the concentration of gamma is up to 420. So what Spotgamma and the AM Founders Note, what they were calling for today was 410 acting as support, which it has for most of the day, and then 420 acting as resistance. So this is very similar to SPX, with the concentration of gamma for SPX between 4,000 and 4,200, and for SPY between 400 and 420. All right, let's take a look now at the NASDAQ. And we'll take a look at QQQ. And 300 is the key gamma strike. And now the put wall has shifted up from 285 yesterday to 290. And then the call wall remains at 310. So that's the QQQ. All right, let's take a look at data now. And a couple of things I want to point out. First of all, the Spotgamma implied move for the day, and this is based on their data in the options market, the implied move for SPX from the RTH open plus or minus 41 points. And I think SPX has come pretty close to that. And right now it's pretty much flat, but it is, as we've seen, it traded in quite a range up and down. All right, then the thing that I normally concentrate on is the gamma notional. And this is market makers' position on the gamma curve. And this, knowing this number, how market makers are positioned on the gamma curve, helps you to anticipate movement for today, for the day, especially on days of there's big economic data like today, or around expiration. So today this is showing SPX in the left column, SPY gamma notional in the middle column, and QQQ gamma notional on the right. So we can see that for SPX, market makers' position on the gamma curve is positive, slightly positive at 287. So this means that, just thinking in terms of SPX, traders are short calls, market makers are long calls, and this is a positive gamma environment. As price increases, they have to sell futures to hedge their delta exposure. And as price drops, they can buy back those short futures. So they're trading against price in a positive gamma environment, and that tends to subdue volatility. And it's just the opposite for SPY here. Market makers' position on the gamma curve is negative for SPY. So that means that traders are long puts and market makers are short puts, and as price decreases they have to sell futures to hedge their delta exposure, and then as price increases or implied volatility drops, they can buy back those short futures. So, and then QQQ is also slightly negative. So the shifts in levels were all positive or less negative today. So SPX yesterday gamma notional was 50, and today it shifted higher to 287. Yesterday SPY gamma notional was minus 1061, and it is less negative today at minus 689. And then QQQ was minus 272 yesterday and has become less negative today at minus 141. So minus 689 for SPY, that's not necessarily a lot of fuel for a Vanna rally, put Vanna rally. Although I think the key today, and I'll talk about this just a little bit more, was to watch VIX today, and that gave a lot of clues about direction of the market. All right, let's take a look at the Vanna charts now, and these charts are a graphical illustration of what I was just talking about. So this is SPX, and this shows how market makers delta notional changes as price changes. So delta notional, their delta exposure is shown on the vertical column. Price or strike is shown on the horizontal column. And you can look at this chart and see how market makers delta notional will increase as price increases. And this green line also shows how it changes with changes in implied volatility. And that's the Vanna effect, the change in delta as implied volatility changes. So this is showing in a positive gamma environment that market makers' delta exposure will increase as price increases, and they have to sell futures to hedge their delta exposure. And then SPY, just the opposite. Negative gamma environment, market makers have to sell futures as price drops to hedge their delta exposure, and they can buy back those futures as price increases. And the black line is showing how their delta exposure changes as time passes, and that's the delta, the charm effect, the change in delta as time passes. And then finally QQQ, also in a slightly negative gamma environment. All right, so remember, I'm going through the steps of my planning process. And this is something that I track every day. These are the key gamma strikes for all the stocks on my watch list. And I track the previous key gamma strike, the key gamma strike from the previous day, and then I compare that with the current key gamma strike. That's the key gamma strike for today, and I note whether the change was higher or lower. So if the key gamma strike increases, I color code it green, just a kind of an easy visual reference, and then color code it red if it dropped. So that's just a starting point. And then the last thing that I want to point out, this is a note that was in the Spotgamma AM Founders Note. There's usually a pretty comprehensive note, and this is just one little snippet. So noting that if the CPI is more or less in line, which I think it was, just month over month as expected, year over year slightly worse than expected, that will lead to a reduction in implied volatility and markets testing the 4200 call wall. So that was really the basis for my thesis of looking at watching implied volatility. So again, I think that was one of the keys today. So implied, remember that for SPY, market makers' position on the gamma curve was negative. So as implied volatility drops, those puts are losing value, and market makers' delta exposure decreases, and they can buy back their short futures, short future hedges. Okay, so again, watching VIX was a key for today. So here's VIX, up and down, and then overall for the day down quite a bit, down about 7%. That's shown Yeah, I certainly don't expect anyone to be able to see that, but it's down about 7% right now. So pretty significant drop in VIX. So that actually helped me quite a bit. My long-term positions were in a little bit of too much positive delta. So this drop in VIX really helps those longer-term positions. Okay, so my thesis for today, based on all this, was primarily to watch VIX. There were, noting that SPY gamma notional was somewhat negative, and there were very little shifts in the levels for the S&P 500. So again, watching VIX, waiting to see how traders reacted to the data. All right, so let's go back. Let's take a look at some setups now. And this is the S&P 500. Spotgamma used to call this the ES futures, and now they're just showing this as the combined signal for SPX and SPY. And this is what goes into a signal for the S. This is what you want to look at if you're trading ES, trading the S&P 500 futures. So let's expand this, and this is going to be again, this is a combined signal of SPX and SPY, and it's going to be mostly SPY, but again, it's adding in the SPX number. So what I saw this morning was a confirmation long. After this quick drop down, price dropped down quickly and then moved up as traders were taking positive delta positions. So that was the first setup. And then this setup, this short, was, I think, even better. A divergence short. Let's zoom in. We can see this more clearly. And what I'm talking about here is Hero starts dropping and price follows, well, it looks like about 10 minutes later or so. All right, let's take a look and see what was VIX doing in this time frame from 9:30 to 11. So let's go take a look at our VIX chart. And so we're looking for VIX falling first and then rising. And so there it is. VIX jumps up just right after the open. Then drops down. Then starts increasing. So that's the 9:30. Actually, this is showing VIX open at 9:15. So there's the VIX from about 9:15 to 11, confirming the setup. And JEC says he took that divergence. Great trade. All right, so there's the confirmation with VIX. And with order flow and hedging flow, let's go take a look at let's just look at the SPY chart now. Very similar. The divergence here I think is a little bit more clear to see. So confirmation long, then hero starts to drop and price follows. Oh, it looks like 15-20 minutes or so later. All right, so let's go take a look at Bookmap now. So we see the confirmation long and the divergent short. So we're on the SPY chart now, maybe a little bit easier to see. So let's zoom in. Just on the morning session here. And you can see how order flow confirms that. First of all, notice the absorption of the big green dot here just after 9:30. That's market buy orders, aggressive buyers coming in and buying around that 410 level. And notice all the green dots moving up, aggressive buyers up until price gets to the SPX 4150 level, and then finally finding resistance at the SPY 415 level. That's an LG2 level, large gamma 2, and the gamma levels are ranked from 1 being the highest or the most significant gamma to 5 being the least significant. So this resistance early in the morning at the 4174, that was a combo 5 level, and this 415 was a more significant level. And the thing to note here in the order flow, look at all the pink dots coming in. Aggressive sellers start coming in, and remember that traders were taking negative delta positions at this time, and VIX was starting to rise. So all leading to the short setup here with 2 entries, and notice the change in cumulative volume delta. Positive here, and then shifts lower at 10 o'clock actually as price continues to increase. All these dots, again, pink dots coming in, traders selling, and finally price reverses lower. And there were actually 2 entries, 2 primary entries. First of all, around the 4150, 415 level, and then another trend break here around 411 down to the SPY 409 SPX 4100 level. So that's the S&P 500. Good setups, both long first thing right after the open, and then short setups. And it looks like now the S&P 500 is making its way back up to the SPX 4150 level. Let's go take a look and see what Hero is doing, what options traders are doing. So now this is showing a potential short divergence setup. Let's just see if looking at a shorter time frame helps. And now they're swinging back to positive delta. And we can also take a look at puts and calls here. So they're starting to buy calls again and selling puts. And notice how that becomes a lot more clear when you change this rolling window period down to 30 minutes. So this is just looking at the last 30 minutes of data, kind of like a shorter term moving average. Okay, so that is the S&P 500. And let's take a look at some stocks now. Apple, there was an okay setup in the morning. Very strong confirmation. Traders taking positive delta positions and price reacting very closely to options trades and hedging flow. So let's go take a look at Bookmap now. We'll take a look at Apple. And up and down just like the S&P 500, but here's the there's the long setup in the morning. I thought the setup in SPY was a lot more clear than this. But anyway, that's Apple. Let's go take a look at, and by the way, I'm jumping from screen to screen here. When I trade, I have two monitors. I'm looking at Hero on one screen and Bookmap on the other. So I don't, when I'm actually trading, I don't have to jump back and forth like this. Here's AMD. Strong rally in the morning, a reversal off the 82 level, which is the put wall and the hedge wall. Let's go take a look at Hero now. Take a look at the and traders were primarily buying calls. So I would consider this somewhat of a divergent setup. First thing in the morning, traders buying calls. Price drips down to that put wall level, and you anticipate that acting as support. So that 82 level was definitely in play, and traders were buying calls, and that was a good entry point for a long. Let's go back and look at Bookmap. We'll zoom in on this, just on this morning. So there's the reversal, bullish order flow. Notice all the green dots, the market buy orders, aggressive buyers coming in at that support level, the 82 support level, and taking price up to liquidity targets above at the 85 level. And for those of you who may not be familiar with Bookmap, this is the heat map, shows a history of resting liquidity in the order book, and price seeks these levels. So at the 85 and 86 level, before price is absorbed there and reverses lower. So good for a 4-point move in AMD, which is a pretty strong move for an $85 stock. And again, confirmed by options trades and market maker hedging flow. All right, Amazon. Yeah, JEC, AMD is slow molasses moving. Yeah, this move today was a large move for AMD. Sometimes it does move very slowly. All right, so here's Amazon. Take a look at Hero now. Not as strong a correlation until you separate out puts and calls and see in the morning that pretty similar to AMD, that traders were buying calls as price dropped and then started to move higher. So that's shown by the rising orange line. Kind of a call divergence setup there. All right, let's go back and take a look at Bookmap. Amazon. We'll zoom in on this. I'm going to increase the dot size a little bit. Often with stocks, the opening print and the closing print, the volume is so large that it dominates everything else. So I'm talking about this. Here's the opening print, this big pink dot. Price drops lower, and these small green dots are showing a buy sweep at that level. And notice these volume dots change to green, so aggressive buyers are coming in with their market buy orders just below this 98 hedge wall level and start to take price higher as traders are buying calls up to the first target at the 100 key gamma strike, and then can't quite make it up to the 101 liquidity. So that's the setup in Amazon. And pretty similar to other stocks, a quick reversal down and then options trades and aggressive buyers coming in and taking price higher. All right, so up and down like a lot of other stocks. Here's Google. And Google still can't get up off the mat after it was knocked down with this AI, the competition, I guess, between Microsoft and their new Chat GPT and Google. So Google has floundered around this level for several days now. Let's just take a look at Hero. And very strong correlation between price action and hedging flow. So there's a short setup with this trend break. As Hero turns lower. And then notice as Hero turns higher, price starts to move higher. So not a lot of movement in Google, but there, just to point out, there's a pretty strong correlation between hedging flow and price action today. All right, the next is Meta. All right, so JEC says Amazon was his trade of the day and took the hedge wall to the key gamma, above the key gamma strike. So good trade. All right, here's Meta. Pretty strong correlation between hedging flow and price action in the morning. Let's go take a look at Bookmap. So I'm going through all these stocks because there was a pretty strong correlation between hedging flow on price action and many of these stocks. So here is Meta again, quick reversal down to the 176 level, and as traders are taking positive delta positions, price moves up to the 180 key gamma strike and the liquidity at that level. That was the first target, and then reverses lower at the upper edge of the expected move, and that's the expected move for the week, and that's based on the options market. There's Meta, and then still chopping around the 180 key gamma strike. Microsoft up and down today. Let's take a look at Hero. Strong confirmation in the morning for up and down, long and short. Let's go back to Bookmap. And there's long in the morning. Not really confirmed that well by order flow. We'll just zoom in on this. Or at least the long was not. I think there's a better confirmation for the short. What I'm looking at is the color of the dots and falling CVD. So pink dots coming in, absorption at the 275 high liquidity level, trend break and price reverses lower as traders started taking negative delta positions. And note the target for the down move. Again, you can see these pink dots more clearly now. The shift to negative order flow, pink dots, aggressive sellers coming in and taking price down to the 270 key gamma strike. And that was the target for a short setup. All right, the next was NVIDIA. Great long this morning if you could catch it. And I've got the 230 level there without a label. I believe that's the call wall. Let's just check on that. So we'll go to NVIDIA, see if it's showing on this chart. Yeah, it is. So 230 is the call wall. And traders are buying calls. Yeah, NVIDIA straight up. Tesla the same thing. We'll take a look at Tesla in just a minute. So traders buying calls and driving price higher up to the 230 call wall, liquidity at that level. So let's go back and take a look at Bookmap again. So again, you had to be pretty fast to catch this. Let's just zoom in. So definitely bullish order flow and bullish hedging flow. Notice the reversal here at the 214, 215 level, all the green dots coming in and moving price higher to the first target. Actually, the first target I would say was the 220 key gamma strike. Next target at 225, liquidity there, and then the target above at the 230 key call wall. Okay. So that's NVIDIA. I'm just reading through questions and comments. And we've talked about the S&P 500. Let's just take a look and see what SPY is doing. So for today, what I've been looking at and what I trade, this was the, I thought this was the best setup. This was the easiest to read, the easiest to trade. I like the clear divergent setups. Again, confirmation in the morning, this first move up with hedging flow and order flow and VIX. So three strong confirmations, and then the divergent short down to the 4100 level. And we'll just take a look at that in the ES. So I think the order flow here in ES really confirms the same thing. Look at this area right here. So the up move, look at all the green dots. Aggressive buyers all the way up to around the 4170 level. And then pink dots coming in, the aggressive sellers with their market sell orders as traders were taking negative delta positions and VIX was increasing and price drops. Let's just zoom in on that level. On that price range. So notice in the subchart here I have cumulative volume delta with this pink dark blue line rising then falling, and also stop orders shown by the yellow line. So buy stops helping to drive price higher, and then sell stops helping to drive price lower. So a number of ways to trade this, the S&P 500 with the ES futures, SPY shares, SPY options, or SPX options. Any number of ways to trade this. All right, so right now price is just starting to, is chopping around the ES 4150 level, just below that. Let's go back and take a look at SPY. So notice the two volume levels here shown by this session volume profile right between 412 and 413, and then between 410 and 411. That's where volume is concentrated for the day. All right, let's take a look at Tesla. Another straight up move in the morning. Confirmed by order flow first. So price goes down, checks the 190, the high liquidity at that level. Buyers absorb these sellers, and the green dots come in, aggressive buyers come in and take price up to the, first of all, this range from 199 to 200. 200 is the call wall and the key gamma strike. Notice all the liquidity at that level. 199 to 200. And then price continues higher. Notice all these buy sweeps here, these small bright green dots heading up to the 205 liquidity, and then order flow shifts bearish, and price reverses lower. All right, let's go take a look at Hero now. So that's NVIDIA. Take a look at Tesla. And there's almost always a very strong confirmation between hedging flow and price action in Tesla. So mainly driven by calls. Traders buying and selling calls, and price responds. So there's the long setup in the morning. Price reverses lower. That's just a pullback. And then price continues higher. Let's go back and take a look at Bookmap now. Go back and take a look at the entire day. Notice that order flow is somewhat bearish today, except for this first move higher. But traders continue to buy calls, so price is moving higher, and looks like that 205 liquidity is could be on deck shortly. All right, finally, I would just want to wrap it up. Let's just take a look at Hero for SPY again and see what traders are doing. I'm going to take a look at a 30-minute look back period, and now they're taking positive delta positions again. So they're buying calls and selling puts. And I changed this to again a shorter time frame, shorter rolling window to get more clarity on that. Let's change that back to 1 day. And finally, we'll take one last look at SPY. Bookmap. And again, chopping around the 412 to 413 level. Okay, that's all I had for today. JEC, thanks for your commentary today. It always helps to know somebody's listening when they're typing questions and comments. So I appreciate your dialogue. That helps quite a bit. And everyone, again, that's all I had for today. Remember, tomorrow, data coming out is retail sales at 8:30 a.m. VIX expiration today, and just in takeaways for today, I think the keys for today were to watch order flow, hedging flow, and the VIX for confirmation, and they all gave great confirmations for longs and shorts today in the S&P 500. So thanks again, everyone. Thanks for your questions and comments, and I will see you tomorrow. Thanks again. Bye.